So this is part 3 of the video, and we have gone through all the difficult stuff. So welcome back to my channel, and in this video we're going to talk about coronavirus stock market recovery with a question mark. And during this time, it just reminds me of a very famous quote in Hitchhiker's Guide to the Galaxy. And in there's a very famous quote called "Flying is just falling without touching the ground." So if you remember that, then I think you can weather through this difficult time just fine. So before we start, I just want to celebrate another success story within Investing Accelerator, where Florence sold her position in Alta today with 70% profit. So congratulations, Florence. I'm really looking forward to your next success, and I can see that you have really embodied the principles of Investing Accelerator in your investing approach. So this is a 5-part coronavirus series where we go through first the origin, in Wuhan, and why is it coming from there. The second part, the frenzy, consumers are panicking about the virus. Part 3, the layoffs, what the corporations are doing in response to the virus. Part 4, the sell-off. What are the investors doing in response to the coronavirus going global? And finally, in this video, we're going to talk about hope, and as an investor, and how you can take advantage of this situation. So first step in a market crash, do not panic, because right now is time to talk about hope and what you can do so that you can take advantage of this Christmas sale season. So it's time to stop and do your homework. So when I'm looking at stocks, I always look at technical, fundamental, strategy, products, forecast, news, valuation, and other techniques. So in this case, I couldn't fit the coronavirus into any of these categories, but then the best one I can fit is into news. So it's time for some logical and rational thinking. So when you look at the coronavirus, right, it's actually very similar to another disease that we know quite well, the flu. So then I went on a couple of websites, after doing some Google search, and I found out that coronavirus, which is COVID-19, has a comparison with the flu. So when you're looking at the symptoms, both of them cause fever, cough, body aches, fatigue, and sometimes vomiting and diarrhea. Now, of course, there are different ranges of these disease in terms of mild to fatal. And when you compare between the coronavirus and flu, they're actually very similar. Now, in terms of vaccine, there's right now no vaccine available for the coronavirus. And then there is a vaccine available for flu, and it's very effective in terms of preventing some of the most dangerous types and reduce the severity of the flu. So a vaccine for a flu is actually pretty common in North America. So if you're watching this video, I suppose you either have it or you know what that is. Now, in terms of infection statistics, as of the moment I'm recording this video right now, approximately 85,000 cases worldwide and 62 cases in US as of February 28th, 2020. Now, for the flu, it has been around for a long time, an estimated 1 billion cases worldwide and 9.3 million to 45 million cases in US per year. Now, just look at that quantum and compare it. And think to yourself, okay, if coronavirus is at 100,000 right now, and you compare to the flu, which is very common, wow, is it even 1%? If 1% of 1 billion is like 10 million, so it's not even 1% yet. So is it 0.1%? That's 1 million. It's actually 0.001%. So as you can see that coronavirus hasn't gone viral yet is because it's a relatively new virus. and is not infecting as many people as the flu. Now let's look at the other number, which we're quite concerned with, the number of deaths. Now, as of the time I'm recording this video right now, there's around 3,000 people that died worldwide. 0 death in US as of February 28th, 2020. But that's actually not true anymore because last time I checked with the news, there's actually someone that died in US. Now, in terms of the flu, there's 300,000 to 600,000 deaths worldwide. So that number, again, it's a lot higher, like 100 times to 200 times higher than the coronavirus. And there's 12,000 to 61,000 deaths in US per year. So again, when you think about it, are we concerned about the flu? Maybe. Are people overreacting about the flu? Not really. Are people stocking up because of the flu? Not really. Is the market going down because of the flu every year? Not really as well. And coronavirus is actually a much smaller disease at this stage than the flu, but is enough to cause a panic, is enough to cause people to shut themselves in, even when the numbers don't necessarily support it. I think people should shut themselves in based on the flu if you look at the statistics, than coronavirus. And if people do shut themselves in because of the flu, then there wouldn't be an economy anymore because you can see that 1 billion cases worldwide that is identified. And of course, there are cases that are not identified. So then this number would be even higher. Now that you look at death numbers, suddenly coronavirus doesn't seem that scary anymore. And if you apply logical thinking and you think about the quantum of the virus versus the flu, then suddenly the virus is just a small potato. So the question is, when does it end? And I think that is a crucial question because, that's when the market is going to go up probably. So, and if you are thinking that way, then you are a great investor. The best way to look at the coronavirus is probably to look at when the flu season ends because they have a very strong resemblance between both viruses. So on average, flu season lasts about 13 weeks. It usually ends by April, but in some years it can linger into May. And again, this is a screenshot from Google. So then right now is March 1st. And that means there's only 2 more months before the flu season ends. Now, assuming coronavirus is not too far off from the flu, then we can probably assume or guesstimate that the coronavirus season is also going to end in April unless somehow it mutates. In hotter countries like Malaysia, Philippines, and India, and a city like Hong Kong as well, then probably the heat will kill the virus itself. As an investor, right now the market has dropped quite a bit, and a lot of the stocks have plunged. And if the virus is going to end and consumer confidence is going to be restored, then you will think that the bottom was going to start to form somewhere between now till April. And the timing there is critical. And that's why you need to know how to identify stocks that are on a discount. That's why you need to know how to separate stocks that are discounts that are between good and bad. There are some stocks that are bad and they're on a discount, and there are some stocks that are good and they're on a discount. So you got to think about that as an investor. Now, in terms of the next piece of stat, there's actually another uncertainty in 2020 that can cause a market crash. And that is really the US election. And if you look at the election 4 years ago, the market was actually just hovering around and it wasn't going up. As we get closer to the US election, there's actually more and more uncertainty around who's going to win, whether that is Donald or whether that is Bernie or whether that is anyone else. So it's important to also look at that because a bottom will be forming for the US election. And there will be certainty after the new president in US get elected. So in this case, the US election is going to happen on November 3rd, 2020. So again, sometime between today to November 2020 is when the bottom is going to form, assuming that the new president doesn't do anything rash that can cause a recession. So looking back at the business cycle that you can see here, you can see that we have passed the phase of strong economic growth. We have passed the peak stagnant economic growth. And because of the virus, because of the election, because of the trade war, because of the frenzy, right now we're in an economic decline, which is contraction. And that's where we are at today. I don't think we're at the bottom yet. That's probably going to happen somewhere in summer, maybe after the flu season ends, maybe just before the US president gets elected. And when the election is ended, and assuming the right president get elected, then we should see economic growth again. So my name is Eric Seto, and my mission is really to help people without financial background to target 30% a year using an hour a week through an online coaching program called Investing Accelerator. So if you want to learn more about my investing approach, you can go to the website 5minuteinvesting.com/free case study, and then you just fill in your name and email below, and you can watch this value pack webinar. So it's quite a long webinar. It's at least 45 minutes long, and make sure you stay till the end. So in terms of results achieved within Investing Accelerator, Florence made 87% in profit from PGR in 3 months. Dexter made 115% from Activision in 9 months. And then afterwards, Irwin made 89.4% from ANET as well. So once you have gone through the webinar, and if you decide to join the program Investing Accelerator, then you can schedule a call with me and we'll chat for 45 minutes to see if you are a good fit for the program. So during this call, it is very valuable because I'll help you map out exactly what you need to do in order to achieve 45%. And this is probably the best 45 minutes you will spend working on your portfolio. So if you are interested, then click on the link below and schedule a call with me. And until the next video, I'll see you next time. So thank you for watching, and I hope you enjoyed the video. Please help support me by subscribe, and you can watch the next recommended video here as well. So I'll see you in the next one.